When you hear the phrase artificial intelligence, you probably picture cutting-edge software, slick chatbots, and lines of code. But none of that software runs in a vacuum. It needs a lot of physical infrastructure, servers, storage, networking, and power-hungry data center equipment to actually work. One legacy hardware company has quietly become one of the biggest beneficiaries of that demand. To understand how this company became such a major player, we have to go back to the early 1980s. The personal computer market was still young, and buying a computer was expensive and inefficient. PCs often moved through layers of distributors and retailers, and each step added cost before the machine ever reached the customer. Enter Michael Dell, who founded the business in 1984 while he was a student at the University of Texas at Austin. He saw that the components inside PCs could be sourced separately and assembled more efficiently, then sold directly to customers instead of through traditional retail channels. That direct model let the company offer customized machines at lower prices while still protecting margins. The company's build-to-order approach also helped reduce inventory risk. Instead of manufacturing huge volumes of computers and hoping retailers could sell them, it assembled systems after orders came in. That gave it a structural advantage in a fast-moving hardware market and helped support a highly efficient cash cycle. By the late 1980s, the company had grown rapidly and went public in 1988. In 1992, Michael Dell became the youngest CEO ever to lead a Fortune 500 company. When the commercial internet took off in the 1990s, the company was well positioned to sell directly online and scale that model further. Today, the company is far more than a PC maker. In fiscal 2026, Dell reported $113.5 billion in revenue, showing how large and diversified the business has become. Its operations are usually split into two major segments: Client Solutions Group, or CSG, and Infrastructure Solutions Group, or ISG. CSG is the familiar side of the business: laptops, desktops, monitors, peripherals, and related services. The consumer PC business matters, but the bigger profit engine is the commercial side, where large enterprises buy fleets of devices along with support, security, and lifecycle services. That gives Dell a recurring relationship with business customers rather than just one-time hardware sales. ISG is where the AI story really takes off. This segment includes servers, storage, and networking, and it is now deeply tied to AI infrastructure spending. Dell acts as an integrator. It buys the components, assembles the systems, engineers the cooling and rack design, and delivers a ready-to-deploy solution for enterprise customers. That matters because many customers do not want to build these systems from scratch. They want a turnkey setup for private AI, enterprise cloud, or large-scale storage. Dell can then attach services, support contracts, and future refresh cycles, which makes the business stickier than a simple box sale model. Dell's market history has been unusually dramatic. It was added to the S&P 500 in 1996, then went private in 2013 through a $25 billion buyout led by Michael Dell and Silver Lake. While private, the company pushed through a major restructuring and made one of the most important acquisitions in its history, EMC, in 2016 for $67 billion. That deal gave Dell a much stronger enterprise storage position and a controlling stake in VMware at the time. Dell returned to public markets in 2018, and then rejoined the S&P 500 on September 24, 2024. That re-entry reflected how much the company had changed from its old PC-only image. There is still a bear case. The first concern is margins. AI servers can drive huge revenue, but they are expensive to build and often come with thinner gross margins than software or higher-value enterprise services. The more AI-optimized server volume rises, the more investors watch for margin compression. Competition is another issue. Dell is fighting Hewlett-Packard Enterprise, Lenovo, Supermicrocomputer, and others for enterprise infrastructure contracts. Speed, price, cooling design, and deployment quality all matter, and no one has a monopoly on this market. The PC business is also cyclical. When corporate budgets tighten, companies delay laptop refreshes, and consumer demand can soften as well. That means the legacy hardware side can still drag on results even when AI infrastructure is strong. Finally, the whole model depends on a global supply chain. If components like GPUs, memory, storage, or networking gear are constrained, deliveries can slip and revenue timing can be affected. That makes execution just as important as demand. The bull case is that Dell is one of the clearest picks and shovels plays in the AI build-out. Enterprises want secure, high-performance infrastructure for training and running AI workloads, and Dell is positioned to sell the physical systems that make that possible. Dell has said its AI server business is expanding rapidly, and recent reporting points to a record AI backlog of about $43 billion, with fiscal 2027 AI revenue guided to about $50 billion. If that demand holds, Dell could remain one of the most important infrastructure suppliers in the AI ecosystem. The other growth lever is the AI PC refresh cycle. As companies replace older laptops with machines that include NPUs and better on-device AI capability, Dell could benefit from a multi-year upgrade wave in enterprise hardware. The company also generates substantial cash, which gives it room to invest, return capital to shareholders, and keep upgrading its product lineup. That financial flexibility is part of why the market has started to treat Dell less like a fading PC brand and more like an infrastructure platform. From a dorm room startup to a global enterprise hardware giant, Dell's evolution is one of the most dramatic turnarounds in modern tech. It survived the decline of the classic PC era, transformed itself through private restructuring and acquisition, and is now riding the AI infrastructure wave. The big question is whether that momentum can last once margins, competition, and supply chain pressure all start to bite. Thank you for joining us in this video. Don't forget to like and subscribe. Comment which company you want to see next.